What is going on, fellow crypto surfers? Paul here, coming at you with a crypto coffee update. I got news, conferences, events, all kinds of stuff. All I need from you is a simultaneous sip, so join me now. Probably sounds a little weird today. I have one of those like travel cup things with a lid on top of it, so all you can hear is the little putts of air that goes through when I drink coffee. But nonetheless, I am all caffeinated up, as are you, so let's go ahead and get into the news of the day. Pantera Capital CEO says investors overreacting to Bitcoin ETF delay, and given the overall veracity of the price action, I'd have to echo that sentiment. According to CNBC, Moorhead says the following in regards to the Tuesday SEC decision, and I quote, "I still think it will be quite a long time until an ETF is approved. The last asset class to be approved for ETF certification was copper, and copper's been on Earth for 10,000 years. Hopefully we don't have to wait quite that long for a Bitcoin ETF. I'm kind of impartial either way, however it does seem that this would make it easier for institutions to access cryptocurrency and overall help for usability and adoption." Moorhead went on to say that rather than feeling pessimistic, new ventures like Starbucks and Bakkt are allowing him to look further down the line and focus on the next 5 to 10 years rather than a short-term price. So this is something we've discussed before on this channel, institutional on-ramps for institutional money, something that's going to be the necessary catalyst to increase cryptocurrency as a whole to the next level, and that's what's being set up recently. You're seeing things like the Bakkt project, you're seeing things like Coinbase's API overhaul and plugins to allow for easy merchant use, so really the groundwork is being set for the next great run. And frankly, we're on a pretty good run still, all things considered. Bitcoin's down to $6,200 roughly at time of recording, and that's still about 82% higher year over year, so in terms of perspective, it's not too bad. And in other news, Shapeshift has acquired Bitfract, which allows you to trade a Bitcoin, or assumingly any amount of Bitcoin, for multiple altcoins using a single transaction. This has huge implications and potential benefits for the layman, the general user that wants to have a diverse portfolio but may have a hard time getting to that point. Let's explore. On Wednesday, the 8th of August, the Switzerland-based crypto exchange Shapeshift announced that it had acquired the Texas-based startup Bitfract. Again, they have developed this tool for multiple altcoins in a single transaction and for average users to gain exposure to diversified digital asset portfolios. It's going to be safer, it's going to be easier, so that's exciting. Eric Voorhees, the founder and CEO of Shapeshift, explained why Bitfract was acquired by Shapeshift. It said that the team had made expert use of Shapeshift's open API and basically built a product that Shapeshift was looking to build anyway. So match made in heaven, and it seems as though Bitfract was happy to be acquired, given the fact that the answer was an immediate yes, as could be seen from this quote here. And our final article of the day, Bitcoin has hit 52 quintillion hashes per second, yet we are still seeing this price slump, so it's interesting. What's going on there? Well, markets are falling, and as you can see, here's a depiction of the zeros that it would take to display that number. Just going to be easier to say 52 quintillion hashes per second, though. 18 zeros. That's especially impressive considering just 2 years ago, Bitcoin achieved 1 quintillion hashes, so a 52 times increase just in the last 2 years. So it's moving pretty quickly. But an interesting question from this author, it doesn't take an economist to know that mining should decrease as prices fall, so why is mining increasing? It's a very peculiar inquiry, and there's a clear answer. And it turns out that a lot of individuals are particularly confused about this. Tom Lee of Fundstrat mentioned that, $25,000 Bitcoin with historical tendency for prices to settle around 2.5 times the cost of mining, that's where we should be. And with only 4 months left in the year, Lee's prediction is looking kind of unlikely given how things are stacking up. Nonetheless, even if the price doesn't recover, most of this mining is being done by what's called ASICs, or application-specific integrated circuits. These machines are very, very specific in how they mine and are used for 1, maybe 2 coins. When the Bitcoin price was high, everybody was excited to get into the mining game, but when prices collapse, as you could see here, sorry, no backsies. So once you're in the mining game, you're kind of in it. And given the potential business application we've seen in the previous 2 articles, perhaps mining at a loss for the short term may not be the worst decision for the long term. But that's just my 2 cents. For now, let's go ahead and jump into a relatively new segment we've been doing called Coin Review. We're going to review some coins, explain a little bit about what they do, and who knows, you may find your new favorite project here on the Crypto Coffee Update, so let's get into it. Our first coin is Nano, a relatively new entry to the cryptocurrency market. Nano claims to have instant transactions, zero fees, and be infinitely scalable. I have some contention with the semantics they use here. Near instant transactions, absolutely. There's no such thing as zero fees. Really, the user doesn't interact with the fees, and that's fine and well. And of course, nothing is forever, not even diamonds. And infinitely scalable, maybe not so much, but given the fact that they have a delegated proof-of-stake architecture, they do have some scalability that is a compromise for decentralization. So, in their own words, what is Nano? A trustless, low-latency cryptocurrency, utilizes a novel block lattice architecture where each account has its own blockchain and achieves consensus via, again, the delegated proof-of-stake voting. Delegated proof-of-stake allows individuals to delegate their power via votes to individuals who maintain the network, and given this is a delegated proof-of-stake architecture, there's no mining on the Nano network. Nano's novel block lattice architecture allows each account to have their own directed acyclic graph, which means the entire Nano network doesn't have to update all at once in massive blocks. Next up we have Waves. Waves is a 2016 ICO that uses blockchain as a service in a decentralized manner. They focus on customer blockchain token operations, allowing individual users and enterprises alike to create their own sidechains on the Waves ecosystem. You can open your own blockchain project on the Waves platform with relative ease as they offer turnkey solutions to users. Waves also has its own decentralized exchange built into the platform, which offers a various array of functionality. No middleman or difficult registration process, also insured matcher nodes executing trades in real time, and of course unlimited withdrawals for crypto with no risk of any kind of exchange shutdown. Next up we have Stratis, which is very similar to Waves in the sense that they're also using blockchain as a service and allow individuals and enterprises to build on top of their network. They offer simple, affordable end-to-end solutions for development, testing, and deployment of native C# blockchain applications and .NET framework. Their proprietary blockchain combines the latest advances in security and stability of Bitcoin with the latest breakthroughs of network speed, scalability, and customization. This is done via a proof-of-stake consensus model. Note, this is not a delegated proof-of-stake, just your traditional proof-of-stake architecture, which allows individuals to stake their coins and receive rewards for verifying the network. Enterprises can develop on the Stratis platform, testing various solutions. They can also test on not only the Stratis network, but can utilize specific full blockchain nodes for Ethereum, Bitcoin, and BitShares to see if there's overlapping functionality, which is a very unique feature. They can also deploy on the Stratis network whenever their application is fully ready to their liking. Next up, we have Populous. Populous is an extremely novel implementation of blockchain architecture with a very legitimate real-world use case. Populous seeks to tokenize invoices on the blockchain and therefore increase liquidity for small and medium enterprises who previously have to pay exorbitantly high fees via banks or just don't have access to liquidity until the other party pays. The global peer-to-peer system allows anyone in the world to purchase an invoice from a seller and raise said liquidity. It's a win-win solution since it's almost immediate funding and smart contracts automatically perform the funding, release payment, and undertake other actions. This has unprecedented safety since it eliminates manual errors and protects from fraud thanks to transparency on the chain. This is made easier through real-world data access in which you can review reports about previous invoices filled from other companies, ensuring that a company has a beneficial and positive track record before you interact with them. This is done through powerful analytic tools which gives you a visual representation of the company's solvency. That's all we have for the coin review. Let me know what you thought of this segment down below in the comments, and of course, links below in the description with even more information about all 4 projects that we discussed here today. Let's go ahead and roll into August 10th, Friday, where we have an NEM Meetup happening in Brisbane. And for the rest of the weekend, I really couldn't find anything other than some AMAs, 1 meetup for a small token, and some various technical overhauls happening for some smaller coins. All of that will be below as well in the B list, which is in the description. Highly recommend checking that out. After all, you never know when something may fly under the radar in your favorite project, so it's worth checking out and seeing what's happening. Thanks so much for watching. It really does mean the world. Drop us a like on Viewly if you haven't already. But for now, my name is Paul, signing off. We are Cryptide, and remember, the tide is rising. Get some jet skis.